acceptance appearing on your screen. I've said thank you to the lady and said that's okay. So we can kick off. Just our session today is going to be an introduction from me. I'm then going to hand over to Martin, who's going to introduce Dudley Council for Voluntary Service and how we ended up working together. Going to do a brief session on what is social investment, a little bit of an intro. And then we're going to move over to hear from our peer, who is Matt from Enterprise Homes Group. And then most importantly, we're going to have some Q&A from you, from the audience. We'll talk a little bit about social investment top tips. So 7 lessons learned, and they've come from a whole range of hear from a peer speakers that we've listened to. Actually, Hannah, right down to Cornwall. I've been down to Cornwall, Let's Talk with Finance, and all around the UK. And then we'll just finish off just before 3 o'clock. So with no further ado, Martin, I'm going to hand over to you to do introductions.
Yes, thank you, Mel. My name is Martin Jones. I'm the funding officer at Dudley CVS. We actually are involved in many projects throughout Dudley and the Black Country. Basically, me and Becky work on what we call the core team, where Becky will support groups with their governance, capacity building, etc. And my support is through funding. We also run a volunteer bureau. One of our colleagues, Eileen, she's the manager, and she engages with people who want to volunteer. Amongst other projects as well are health-related projects. It's all about health and well-being, and also carers' responsibilities and all the rest of it. Why we're here today, back in July last year, I joined a NAVCA event called Why Social Investment Matters, and it was in partnership with Big Society Capital's Good Finance team. The purpose of the event was to outline the role social investment can play in supporting the sector. And what I liked about the event was that it was very clear and also gave me a lot of food for thought. We had a simple definition of social investment as being the ability to raise repayable finance to achieve social purpose. Now, for some years, me and Becky have been thinking about running an event in Dudley and wider in the Black Country to bring this to the notice of a lot of the charities we work with. However, the subject often appears quite complicated, and I always thought it was aimed at large pots of money, such as social impact bonds, etc. However, I found out at the event in July that you can get smaller amounts of money, and that maybe the groups that we support could actually go for it. So, having listened to a representative from the Key Fund and 1 or 2 other people talk about what they do, I spoke to NAVCA after the event, and they passed me on, and we then had a meeting with Olivier, and we decided that we'd run this event in Dudley. So that's why we're here today. As Mel said, there's a lot to take in. There's going to be a really good peer support presentation by Matt, and also there's going to be a questions and answers session. So take notes, whatever. This will be recorded, so the link will be sent to us after the event. But obviously, I think the questions and answers will be really useful, as will Matt's presentation. So all I can say is take it on board, and good luck for your future with raising social finance.
Lovely. Thank you, Martin. That's great. Becky, did you want to come in at all, or are you just happy for Martin to?
I'll just briefly add, yeah, I was introduced to social investment at a Good Finance event in the before times in Birmingham, and I was really taken by the case studies there. So I think we're going to get a lot out of Matt, not to put too much pressure on you, Matt. I think we're going to get a lot out of the Hear from a Peer session, because I was quite taken with the stories from, it was charities, social enterprises, from quite small grassroots organisations, and it did demystify a lot surrounding social investment and how it isn't just for the big shots with, you know, lots of different income streams. I'd also add that from a CVS perspective, we also trade. We run a few community venues. So for any organisation that has a trading model, I think social investment is well worth looking at.
Super. Thank you very much, Becky. That's great. Okay, so I think what we'll do now is move straight onto my slot, Olivia, if that's okay. And share the slides and we'll go from there. Super. Okay. So this is Let's Talk Good Finance. We're going to be talking about resilience, risk and social investment. It was great actually to hear Martin and Becky put into context how they came across this. We're already, as a sector, we're extremely resilient organisations. I don't need to tell that to all of you sitting on this call, running your organisations around the country. But, you know, there are risks in everything we do. There's the risk, the fact that there's more need than usually that we can cope with. We are often at the behest of whether it's local authority in terms of or grant makers, whether contracts are going to be renewed. And so trading and being enterprising is one of the ways that you can have more control over the sustainability of your organisation. Now, it's not for all organisations. We're not here to sell social investment to you. We're simply here because we are all committed to every social enterprise, charity, and voluntary sector organisation knowing as much about social investment as they do about grants, so you can make an informed decision as to whether taking on social investment is right for you. So let's start, Olivia. I think we're going to start with a poll that we usually do. Oh, sorry, that's me. You've seen me. I work for Big Sighted Capital. Sorry, I should have said I'm Social Sector Engagement Director, which is a very long title and basically means that I spend a lot of time talking to social enterprises and charities. So should we do the poll first, Olivia? That'd be great. So we're going to just ask you a question based around your current knowledge of social investment. So you should see a poll that's appeared on your screen, and we're asking you to rate between 1 and 10, yeah, of how would you rate your knowledge of social investment at the moment, which is with 1 is no knowledge and 10 is excellent knowledge. Don't worry, this is completely anonymous. It's more really to get a temperature check for the group to see where we are at the beginning, and usually find that this is, you know, quite representative of the groups and the audiences that we actually speak to. So we're up to about almost 80% participation. So I'll just give it, oh, we've got 40, so it's counting up, isn't it, to a minute? So we'll just give it a few more seconds. Okay, so do you want to just share the results, Olivia, so we can see those? Can't see anything on your screen, Kirsty. Oh, that's unusual. Okay, we'll make sure that we catch up with you, Kirsty, and work out why that is. Okay, so you can see that our spread of knowledge, I can't see the results. No, Olivia, you're asking if I can see the results. I can't see those. Oh, it's showing on your screen. Okay, well, that's good. Let me stop sharing. Let's see where they're okay. That's better. I can see them now. Okay, great. So we can see that we have a range of knowledge across our organizations from probably, I would say, what, about 60%, 70% are somewhere below 5. We've probably only got quite a small amount of organizations, 4, 28, 20, yeah, about a quarter of us, I suppose, are above the halfway mark. So we're starting from a position of a mixed level of knowledge, but not a lot of knowledge, and that's absolutely fine. That is why we hold Let's Talk Good Finance and why we're here today. So let's hope that we can, through this session, build a little bit on that. Let's go back to the slides, Olivia, and I'll carry on and set the scene for you. Super. So as I said, the role of social investment, I said that it worked anywhere across the UK. We know that the organisations that you're all running, that we all want to support, are dealing with some of the most challenging issues around the UK. So whether that's health and social care, whether it's about running community venues, whether it's around consultancy and support, or around a whole range of different health services. The great news is that social investment works across the UK and for all social issue areas. But just to be absolutely clear, social investment is the use of repayable finance. So that basically means it's money you have to pay back with interest. I often start by saying, well, that's the bad news. And then people say, what's the good news? We're going to tell you more about the good news, and that's coming up. Okay, so a little bit social investment history 101. This is a very potted history. So we have the financial crisis of 2008, 2011, and you have a compounded issue here between austerity, less available income. You also had public sector, because of austerity, moving away from contracts. And then you put on top of that the pandemic, and for many organisations, it really meant they had to look at the way that they had provided services before. And social investment is one of the ways that we can do that. So what does that mean? It means, whoops, just go back, sorry. It means that they're, but against that background of increasing demand, social sector organisations really want to think about their own resilience and sustainability, income generation and their own revenue models, and therefore, as a result of that, funding and finance required to support their organisations. So we're going to move on now, and we're going to tell you what social investment is. Well, actually, I'm going to cheat here, because in 1 minute and 34 seconds, I actually think this animation can do a much better job than I ever could. So we're going to watch a very short video on what is social investment.
Across the UK, charities and social enterprises like yours are tackling some of society's biggest problems. Maybe you've set up a coffee business to give people the skills to get back into work, or are running a nursery and using the profits to support local parents. Whatever your mission, you'll need money to help with cash flow, to grow your organisation, or to buy an asset like a new building. You might even need finance to kick-start your new venture. And that money could come from traditional grants or donations, or as a loan from your local bank. One option is to get that money from a social investor. That social investor could be an organisation or an individual, and you can borrow their money or offer them shares in your organisation. But what makes a social investor different? Well, they don't just want to see a return on their investment. They want to see their money being used for good, helping you to keep delivering your social mission. Sound good? To see if it's right for you, check out goodfinance.org.uk.
Thank you, Olivia. That's great. So just if you ever go, when you go back to your organisations, if you ever need to try and explain what social investment is to somebody, you can get that video from Good Finance. And I think it's definitely one of the easiest ways to be able to explain what's different about social investment and the impact that it's looking to create. So now we're going to move on and talk about your financial toolkit. In your financial toolkit, we would like you to think about having all of these different aspects of opportunities. So you can look at donations and fundraising, you can look at borrowing from banks, you can look at delivering on contracts, and all of this constitutes some type of trading. So where social investment doesn't work, it's not a replacement for grants. Okay, so it's not going to replace grants. It can sit alongside donations and grants as another tool that you can use, and usually it's bucketed into these ways. So it can help you to buy an asset, which could be a building or something that the loan can be secured against. You often think of this most likely in the form of a mortgage is the best way to explain it. Delivering a contract, I don't know if any of you on the call deliver payment by results contracts where the local authority will pay you as long as you do certain outcomes. You often need to cash flow those contracts up front. So you might need to recruit staff or invest in some forward-looking costs, and you might need money to borrow money to cover that cost. We say kickstart your organisation. You notice it doesn't say start. And that's because startup funding or seed funding is more challenging. I'm not going to say that it absolutely isn't available. And there are some ways that you can do that through crowdfunding, through community shares. And there are some social investors that will invest in this space, but it's definitely more challenging. You usually would use grant to pilot or to do a sort of proof of concept and then borrow money to move that on. To grow your work, so that's often about scale, so about doing more, and you might need to borrow money to invest up front so that you can see savings further down the line. And then developing new innovations. I suppose a lot of this is around a lot of the things that social enterprises and charities alongside other organisations had to do during the pandemic, and that be around pivoting your business or changing your business model around the circumstances. So you often need to combine, have a combination of those tools to be personalised to your own organisation's setup. We move on to the next one. Okay, so key considerations, the things that you need to think about. If you're going to think about social investment, number one, or even actually before number one, I'm going to go before number one, you need to have some kind of enterprising activity. So some kind of income that would allow you to repay any investment that you take. So then you need to think about, what do you need the money for? All right, why would you need to raise the money? And that is usually based around the enterprising activity or the trading history that you have. Repayment, is there an income stream with a surplus? We say surplus, but actually I'm quite happy to say profit. It's not bad or wrong to make a profit. What social enterprises and charities do that makes them different is what they do with that money when they've made it, which is often reinvest it into services that aren't supported by trading or need to be delivered free at the point of contact. So the sorts of things that can come under there would be government or local authority contracts, rental income. A few of you talked about running community assets, membership fees if you're a membership organisation, but you can also have donations, and then trading covers a whole range of things from retail, so charity shops, coffee shops, from running sports-based facilities, running advocacy, mental health and advice services, a whole range of things. I'm going to cover some of those in our examples coming up. So types of providers. Now, one of the things that we often find is that if you can get social enterprises and charities, if they're trading, and then you can often find there could be a little bit of cultural resistance to taking on debt, so borrowing money essentially for the creation of impact. You usually find that people want to get from A to Z as quickly as possible. So I've got a trading idea, I need to raise some investment for it. Who's going to lend me the money? But actually, there's a little bit in the middle that you need to do, which is to understand that not all social investors lend the same type of money. So understanding what you want the money for and what type of lending is the best product for you to use will help you to narrow which investors you should probably start to speak to. So there are two main kinds of social investment products available: debt and equity, sometimes heard as loan and shares. So debt or a loan is when an organisation borrows the money back and pays it back, usually with interest and over a period of time. The average lending for a loan is somewhere between 3 and 5 years, but can be shorter and it could be longer. Now, equity is a bit of a challenge in our sector because not all governance forms, so that's the legal structure that a social enterprise or charity take, actually have shares, the capacity to give shares away. The ones that do are community interest companies limited by shares, what used to be known as an old industrial and provident society or a registered society, and community benefit society. So where you don't have shares and can't do that, you sometimes hear this term quasi-equity. I sometimes refer to it as crazy equity. So it looks like equity, and the best way I can explain that to you is like a Dragon's Den format, where somebody says, I'll give you X amount of shares for X amount percentage of your business. And it looks like that type of money, but actually the organisation doesn't have any shares to give away. There's lots of talk about this type of product type. We'll post some links into 3 different types of ways you might hear about quasi-equity. Sometimes talked as quasi-equity, sometimes equity-like, and sometimes as revenue participation. But probably the most common form, often utilised by social enterprises and charities, particularly those that are looking for their first investment, is blended finance. So that's where you get grant and repayable loan from the same source. So you get a small amount of grant which doesn't have to be repaid alongside some loan, and the two combined together are blended. When you consider that the average first time need of a social enterprise or charity is £50,000, you can see how having a small amount of grant alongside that loan can often be really, really helpful. There are two main ways of getting social investment. It can be from an organisation like a specialist social investment firm. So you might have heard of people like BCRS or Resonance or Big Issue Invest. They would all be examples. Key Fund, they would all be examples of that type of organisation. Or social banks, people like Charity Bank, Triodos, Ecology Building Society, Unity Trust. And then we also have trusts and foundations. So increasingly grant-making trusts and foundations, people like Esme Fairbairn, Joseph Rowntree, also do some investment alongside their grant-making. And then we get individual investment. So I've talked about some of these already: crowdfunding, community shares, using social investment tax relief, either from high net worth or retail investors. High net worth investors are people who are have a level of certification so that they understand that they're putting money at risk. And then retail investors usually invest through things like crowdfunding or community shares. And retail basically means your average person on the street like you or I. And then angel investors, those are like the Dragon's Den. So we have a sort of, I'd like to think of them as social angels, people who care about investing. We have a really good blog actually on good finance, perhaps Annie will find for us, which covers an investment into Jericho Foundation, which is in Birmingham, and is from a lady called Thelma, and she talks about why she made an investment into them. Okay. So finally, who are the funders? I've talked to you about the different types, and then you'll have a look at this sliding scale across the bottom. So if you think about traditional investment from perhaps high street banks, then they're very concerned about obviously getting their money back, which is the same as the social investors. Sometimes they care about things like creating jobs, but essentially it's a financial proposition. On the left-hand side, where you're getting philanthropic money from grant making, then they're not expecting their capital back, they're expecting the outcome. So social investment sits somewhere in the middle. So it needs to get its money back with interest, so it can be recycled and lent to another organisation to do to make change. But a social investor cares about the difference their money will make. And what often makes it different to, say, a grant maker is that the social investor won't tell you what difference they want you to make. They'll expect you to tell them how you're going to use it to make that difference. Okay, so just rounding up with a little bit of additional support. We're only touching on the surface of all the things that Good Finance can provide for and support you with. It was designed by social enterprises and charities, for social enterprises and charities, and it covers both from what social investment is, key things to consider, more about governance structures, something about the different types of finance, and it also has a list of all the investors. So it's a good thing to say. Did you know that 85% of the investors listed on Good Finance are social enterprises or charities themselves? There's also things like a way to help you understand the cost of capital. So how much does money cost? And that's definitely something I'm going to come back to. And then Access, our sister organisation, have the Reach Fund, which is a way where social enterprises and charities who are looking to raise investment can obtain some additional specialist support as they embark on their investment journey. And then also Social Investment Business had a really successful COVID intervention using the CBILS. So we have lots of acronyms, don't we? Coronavirus Business Interruption Loan Scheme, which was a government intervention. And they now have a current fund, which is the Recovery Loan Fund, which you can find out more about. Yes, great question, Lomax. Yes, you can get a copy of the presentation and the handouts, and yeah, absolutely, we'll make sure as well if there are any questions that come up in the chat that we'll capture those as well. So I'm going to come back and talk to you a little bit more. I'm going to curate the Q&A session, and I'm also going to come back and talk to you a little bit more about some of the lessons learned, because I'm sure these things have come up time again. Please do feel free as I'm handing over to Matt, if you think of questions either that are covered by Matt or are prompted by his session, then please do start popping them in the chat, would be great, so that I've got some ready and waiting. But otherwise than that, I'll definitely get ready to kick some things off. So with no further ado, I'm going to hand over to Matt Lambert, who's the Chief Executive Officer of Enterprise Homes Group. We call these sessions Hear from a Peer. I always used to ask people when I did these events around the country, why have you come to a Let's Talk Good Finance? And I remember that there was a lady, I was doing one of these in the East Midlands, and she said, I've come to find out what the social investors won't tell me. I think what that really means is that there's something about peer sharing that really, you know, there's an authenticity about somebody else having been on that journey that really resonates. So we ask our Hear from a Peer speakers to be really honest, to not dress it up like a sales pitch, to do the sort of warts and all, the good bits, the challenging bits, the bits I didn't expect, any top tips that they can give you. And I'm sure that Matt will be happy to share some of that with you. So Matt, enough from me, over to you.
Hi, so my name's Matt. I run the Enterprise Homes Group in Wolverhampton. I think it's always good to start off somewhere with something a bit of a nugget. What's one of the things that I've come to an event put on of this kind of nature and learned that has really stuck with me. I think it's a really important starting point in many respects, and understanding what it is that you want to get out of social investment is understanding the difference between a social enterprise and a trading subsidiary, because we have both. And until it was really explained to me in the simplest possible terms, I never quite understood what the distinction was. And it really boils down to something simple that helps get you thinking about what it is that you want the social investment for and what it is that you're seeking to achieve. You essentially ask yourself a very simple question: would I do this if it didn't make money? If the answer is yes, then it's a social enterprise. If the answer is no, it's a trading subsidiary. And that actually really helped me to understand the context of a lot of the work that we were doing around having a variety of companies that we were using to support the activities of our main charity. And we have at times attempted within our context to simplify things so that we only have charitable activity and trading subsidiaries, and seem to keep falling back into ending up doing more and more social enterprise work. Probably my fault, because I'm so keen to want to be getting more social impact constantly. And one of the biggest difficulties you'll find, and it's a very similar sliding scale to the one that Mel put on in her previous presentation, is that any given social enterprise will be pulled in two directions. One is making money, the other is giving a social impact. And generally speaking, and unless you've got some kind of magic formula or found something incredibly innovative to do, the more money you make, the less social impact you have, and the more social impact you have, the less money you make. Just tends to be a kind of a way that these things work. We, as an organisation, Enterprise Homes Group, were originally set up about 8 years ago to tackle homelessness in our city. And we've been doing that for some time. And I mean, the question about how did we get into doing trading activity and thinking about the variety of different ways of doing things really came out of the fact that we were a franchised organization. So we started out as a franchise of another organization, and then started to find that as we grew and were a little bit more successful, that we were ending up competing at a national level with our franchisor when it came to funding applications. And that doesn't work, because they've got a much bigger balance sheet, and they've got, you know, all sorts of other things that they've had in place, longevity, stability. And so we had to think through this question of what can we do that would be a bit different, that would enable us to have money coming in that isn't always about grant applications. And it's another question that has to have reared its head for some of you in this season, because I think many of us would have experienced that the difference between 2020 and 2021 in the grant world, which has been that in 2020 there was lots of money flying around for all sorts of things, and then in 2021 not so much. And so if you're entirely reliant on grant funding in this season, it may be that you start thinking to yourself, are there ways that I could consider diversifying income streams? So you may be asking the question in relation to that sense of not wanting to have all your eggs in one basket. So it may be a financial thing, but it also may be that having something more of a trading activity within your context supports your charitable aims. So I think this is I've had social investment 3 times now. And the first time that we went for it was with Big Issue Invest. We had an idea that we'd already started developing within the context of our charitable activity, but we wanted to develop it more on a trading footing of getting a painter decorator working alongside a couple of Eastern European people transitioning through homelessness who had no recourse to public funds. And the idea was that we would put them in a house and provide for them what they needed, and they would do work placements alongside the painter decorator in order to gain skills and start working towards independence. And it very much served our charitable aims to be able to do that. But at the time, it really needed us to be able to bring in an operations manager who had a real business sense to be able to focus on that side of trading and business activity. Because, I can do all right at those things, but it's not what floats my boat. And I really like the charitable side of things and wanted to be able to focus on what I feel like I do best. And we've always wanted to adopt a strength-based approach to everything we do. So finding the right people with the right strengths. And I think that's another thing when you're considering developing any kind of new activity, is thinking to yourselves, who have I got on my radar that can head this up? Whether that be in terms of the operations person on the ground, or the board members around any new activity that might be set up separately to what the rest of your main charity does from a point of view of limiting the risk. Always good if you can to limit risk. Trading subsidiaries are great from that point of view because the liabilities of the trading subsidiary do not affect the parent charity if that's how you're set up. And that went well for a couple of years, and the concept worked, but didn't work quite as well as we'd hoped it might. And we were approached in early 2020, pre-pandemic. Whether we'd have done it knowing, I have no idea, but benefit of hindsight, and by another organization that was already doing house clearances and furniture sales, just saying that they were getting on. I think their volunteers and the people that were running the organization all in their mid to late 60s, and they didn't feel like they could keep it going for much longer, and would we be interested in taking it over? And we had a look and a think, and came to the conclusion that actually, in terms of it being expandable, serving the purposes that we needed around creating work placements, work experience, and jobs for people transitioning through homelessness in a low-skilled way that anybody could really try their hand at, and with a variety of different skills involved in order to be able to help people to work to their strengths and find out what they enjoy and what they're good at, that worked quite well. So we started journeying with this organization and took some steps towards taking over, and then unfortunately had a major falling out, which I don't need to get into, and decided that we'd learned enough in the process to actually consider venturing out into doing this ourselves. But the only way we were going to be able to do that was if we had a fairly decent influx of cash from the outset, because the activity of doing house clearances is quite infrastructure heavy. You need a van, and a fairly big one at that. You need lifting equipment, you need a warehouse for storage, you probably want some form of outlet for sale. That's quite a lot of upfront investment. but we felt it had the potential to generate income at the same time as providing these opportunities for work experience and placements, and that therefore we could put a plan together that would enable us to consider taking on repayable finance that would get us started up front with everything that we needed and give us enough time to be able to get properly established in terms of the business plan to be able to repay it down the line. So we approached an organisation called Resonance based in the West Midlands and started a conversation with them. I say a conversation, that conversation was probably 2 days a week for 12 months in the end. I mean, to be fair, we were asking them for just over £100,000 in upfront investment. So we knew that they were going to want to scrutinise things fairly carefully. In many respects, and I think this is the bit that I wasn't expecting really, is that that conversation turned into an examination, which turned into a colonoscopy. And I say that jokingly, but actually there was, you know, the person that was doing the reporting on behalf of Resonance probably knew more about our organisation and our finances than some of the board members did. It was incredibly thorough. But when you think about the reason that that you go to your doctor to get a colonoscopy, it's because you want to make sure that you're healthy. And actually, that ended up being one of the primary benefits, not of getting social finance, but of exploring the possibility of getting social finance. Now, don't get me wrong, I'm not suggesting that you manipulate the system, but what actually ended up happening for us is that the amount of time that we invested in exploring the option of social finance with Resonance gave us completely free of charge financial and business advice and support over a 12-month period. So they pushed us to think about our business plan and asked so many questions, some of which we weren't actually asking ourselves and probably didn't even know that we should be asking. And at the end of it, they were able to give us, you know, enough of a clean bill of health, to keep the analogy going, to be able to say, actually, yes, we do think that it is worth us investing in you. But in some senses, even if we'd gotten to that point and the answer had been no, the benefits to the organisation in terms of the level of self-examination that we had to do, plus the outside input from others more experienced than ourselves around business and finance, would have been of benefit in and of itself. So I think in that sense, I'd really encourage people to think of it as an option, because it does give you that possibility of getting assistance around that examination of your business, building financial models, business plans, and all these kind of things. And even along the way, you can get outside organizations, you can get audits, you can get support, sometimes in the form of grants as well, to bring people in to assist in terms of the business plan side of things and exploring all of these options. And we just found that of immense benefit to our organization, as well as the fact that there was a huge amount of pushback that we got in relation to various aspects of the way that we do and run the business. And again, that kind of forces you to work out what your stance is, what your position is, and are you capable of actually articulating that in a way that answers critics. And so a lot of those, you know, some of the things that they pushed back on, we said, well, actually, we'll change that. Some of the things we said, no, actually, this is the way that we do things, and this is why we do it. And it forced us to know how to be able to say that in a really clear way. So I think that, you know, even outside of anything to do with money itself, the actual process itself, whilst being highly invasive and quite time consuming, actually was a really positive one overall in terms of getting a much better handle on our own understanding of the business itself. So we actually managed to secure the 105,000 alongside 80,000 in blended grant finance through Access Foundation. We have a 3-year period of repaying that on an interest only basis, and then 3 years of repaying it capital and interest. And it enabled us to purchase quite a lot of equipment that was necessary to be able to get started upfront. In many respects, because of the work that we were doing in homelessness, we had a fair number of people that we could already envisage using within the context of work placements. So we were human resource plentiful, but cash strapped. And that was actually probably a really good position to be in when it came to thinking about social investment. So starting with looking at what have I got? What are the resources that I can use? And how could I potentially use finance of this kind of nature to complement those things? And as was said before, to kind of kickstart moving forwards into achieving so much more. And we've managed, over the last 6 months, we expanded to take on a number of Kickstarters within the context of youth unemployment. We've now decided that 3 out of the 6 Kickstarters we took on originally are actually going to stay working for us within the context of the business, which I think is 50% of that first cohort of Kickstarters now work for us. I think that's phenomenal. We've had a lot of people coming through, being able to get work placements, gaining experience, growing in confidence, learning on the job. The impact has been really quite substantial, I think. And it was only thanks to having that input of capital from the outset that we were able to kind of really set up what we needed to be able to get going. And there's now a really high quality charity shop for furniture in Bilston that we get a lot of repeat customers at. We have the opportunity from time to time to be able to offer free furniture to some of our partner organisations in homelessness, where people are setting up new tenancies and have got absolutely nothing. So there's a variety of ways in which it's empowering us to be able to have a social impact. And at present, we are currently breaking even in terms of the financial side of things, which is a good place to get to, albeit we've had to adapt along the way. So I think the last month, a substantial part of our income came from removing ATMs from banks where they no longer need them in place. The fact that we had the investment up front got us the van. When you've got a man in a van, there's all sorts of things you can do with it. And so thinking creatively about, if the van's not being used today, is there something else that we can do with it that'll continue to serve both our social impact purpose and continue ticking us over from a financial perspective? So just in terms of the terms of that, so the interest rate that we're paying, it's a bit more complicated than just being a flat rate, but I probably don't need to go into that. It works out at about 8%, which, I'm definitely not complaining at. I don't think I'd have found that kind of interest rate anywhere else over the kind of period we're talking about, with the level of risk involved. And so for us, the whole thing has been a really positive experience, start to finish. And even the warts have turned out to be, great for us too.
Fantastic.
I think that was about my time, wasn't it?
Yeah, perfect. So that was really, really good. Thank you, Matt. That's great. Oh, you did so much of the things that I was gonna say. I'm just gonna say that I often get asked whether social investment is worth it. And I always say, well, the only people who can actually work that out is you and your board. But the thing I think you did perfectly there and explained for everybody is the fact that social investment, it's not a thing in its own right. It's just a tool to create impact. But what you've described is being very enterprising. And so I wanted to come to the first question that I have, and I'm hoping there's lots of, how many people? Got 27 people out there in the audience. And I certainly know my fellow Midlanders are fairly noisy, so I'm sure they've got questions. But I also know we've got people from all around the country. So if you want to start, you can either pop in the chat your questions, or you can raise your virtual hand. And I'll try and keep an eye on that, or Olivia and Annie will flag to me if somebody wants to come in and ask a question. The question I thought I would start with was you said it's really useful to think about, you know, who you've got, who's around you, who can head this up, because I think there is a point here about the skills that you need to trade, and I suppose not assuming that the skills that work maybe in an organization that doesn't trade will work in one that does. So have you got anything you could share with the organization where you think you've got that right, and then, or maybe where you've learned, actually, you know, there's a key skill here to make this trading really successful that we need to go out and look for?
I think certainly in terms of the house clearance and furniture side of things, getting the right people on the board was something that I think we really got right. Both of the main guys that we have on our board of directors would tell you that I twisted their arms to get them to do this, which absolutely wasn't the case. It was a simple conversation saying, you know, fancy a bit of an adventure, frankly, and they both said yes. One of them manages a multi-million-pound software company in Wolverhampton, and the other one has been in and around social investment and social impact for the last 30 years. And you know, I think in some respects, having the courage to ask the question is really important, because we kind of, you know, you often hear it that people who are successful and people who are really good at what they do are in demand and they're always busy. And so we kind of think, you know, there's no point even asking, because they're only going to say no. We asked the question and they both said yes, and they both bring an enormous amount of experience to the table from a business point of view. And, you know, we lean on them quite heavily without them actually necessarily having to commit huge amounts of time into the organization, and without it costing us anything. So there are, I think this is again, so human resources and realizing the impact that human resources can have and where you might get capital from in terms of experience and knowledge, particularly in the business sector, is a key part of being able to move forward with trading activity.
Yeah, that's really, really important. And I often you know, or have people reflect on, I've got a piece of personal experience here. So before I worked for Big Society Capital, I ran an organisation called Social Enterprise West Midlands, which was the network for social enterprises and charities. And before I joined, we were publicly funded by the Regional Development Agency, and then all of that money went. I never had the luxury of spending any of that, I have to say. And my predecessor, who was chief executive, he had been used to working in a public environment. He felt quite uncomfortable asking for money to be paid for a service. I was quite comfortable and confident to ask for money because I felt we were offering a service that was worth paying for. But I think having the confidence to be able to do that are really important. So
there's a question in the chat about whether either of them were reluctant.
Yeah, I was just about
to take on.
I was going to come to that. Annie said that, yeah, because I mean, the appetite of board members is really important.
And the answer is absolutely not. The board was, in fact, in our situation, it actually ended up being both boards, because the money itself was loaned to the parent charity and then on loaned to the CIC, that is a trading subsidiary of the charity. And there was appetite on both sides. I think both boards were fairly confident that we had a good grasp of the issues, that we knew what we were doing, that we'd managed to find the right people to bring into the mix to be able to take this on. And I think the chair of the main charity, alongside myself, we're both entrepreneurial and risk-minded individuals, which isn't necessarily always the case in the charitable sector. But I think, you know, I imagine the level of risk we were prepared to take on is commensurate to the level of reward that we're seeking in terms of the social impact that we want to have.
Absolutely. And I think that is for everybody on the call. That's a really, really important point. So, you know, we all take risks every day. You know, if you're an organisation that's 100% grant dependent, that's an awful lot of risk for your service users going forward, your customers, in terms of at the end of that grant in 3 years' time, can you provide any service, because you're sure that they're still going to need it. So, you know, if you take on a contract from the local authority and it's based on payment by results or a certain amount of outcomes, then, you know, you take a risk in whether you're going to be able to do that. This is all about, I suppose, a balance of risk. And one of the ways is often to make sure that you've got people that are either comfortable with that risk, understand that risk, and if they don't, then it is either about helping them to understand more. And the very best way to do that is through peer learning. So I'm going to come back a little bit more, because we've got I've got Becky has got a similar question here. We'll come back and talk about boards a bit more, and I've got a couple from Rich in the questions. But I think Sharon wants to ask a question first. So Sharon, do you just want to come off mute and ask your question?
Will do. Try and put my camera on as well. See if, oh yeah, there we go. I've appeared. Hi, Matt.
Hi, Sharon.
So yeah, gosh, Matt, congratulations, because we've talked a lot over the years, really. And 2 or 3 years ago, before COVID, we were talking about exactly this, social investment. So congratulations, gosh, well done. You've done so much. I mean, I remember when we talked about social investment that you'd got quite a broad structure, hadn't you? You know, you'd got the charity on the one hand, you were looking at social enterprise, the trading subsidiary. It was quite kind of a broad structure. I was going to ask something around the relationships, the personal relationships between all of those people, but I think you've probably picked it up already, and also the skills mix, which I think, again, you've picked up. So I suppose I'd just kind of like to ask, how do you see the future for the company? Do you think that you will be branching out further, or, I mean, have you got like a 5 or 10 year plan now? How do you see the future?
It really depends on what side you look. We're in the process of revisiting the business plan on the trading side of operations. So at the moment, we've got 3 trading subsidiaries, one in property maintenance and development, the households, clearance and furniture sales trading subsidiary, and another one that is doing work in property investment, particularly around buy, refurbish, refinance schemes. That one being a pure trading subsidiary that only exists to make money. I think I've got a meeting tomorrow to talk about the possibility of taking over a coffee shop in a church in Wolverhampton. We've talked about other opportunities. Any way that we can branch out in a way that isn't going to risk the things that we're already doing, that enables us to create more opportunities to have jobs and come alongside people, demonstrate the difference that we make with our business practices. Those are things that we will consider. I don't see huge amounts of social activity in our area that is going on that is tackling this issue of really looking at how we creating jobs for people in a way that really helps them to grow their identity, to understand who they are. And I think in some respects, the more opportunities that we can offer in terms of the different skill sets, the better a chance that we have with any of the beneficiaries that come across our path to be able to offer them something that's going to be in line with their gifting, skill set and passion. So I think you need something that has that wide range of opportunities there to be able to offer them. On the charitable side, where we're going is looking at developing the conversations around identity. We don't want to grow the charitable side any more than it already is. We want to look at empowering existing organizations to be able to deliver some of the learning that we've got, and are particularly hoping to work with faith communities to look at building more resilient communities, and how faith communities, not just churches, but mosques and gurdwaras and others, can be part of the government's levelling up agenda at a grassroots level in order to prevent poverty and homelessness in the next generation.
Interesting. Thank you very much. Thanks, Sharon. That was really good. And actually, this is going to be a really, I think, pertinent next question. So I'm going to just come to, no, let me just finish dealing with the board's question, and then I'll come to the question that Rich has posted. So Becky, you said you can ask a similar question, because, recognizing, you're right, it's not for everyone. For some organizations just won't. I mean, there's an organization in Hull that I know of, Preston Road Women's Centre, and their chair, Lisa Hilda, talks about the very first time they're going for investment, and they really wanted to scale the impact. They work with victims of domestic violence and families, and they only had a couple of houses, and they really wanted to. They had so many more people they couldn't help. They lost half their board the first time around, because half their board just did not want to get into the position of taking on this level of risk. So it was like the toughest thing they've ever done. But they rebuilt their board. They obviously reset. That's not meaning they just got round everybody. They just got a more balanced board of people who were prepared and happy and comfortable with taking that risk. I think they're on their 10th social investment now. So, this has been a real journey for them. But I would say that one of the best places to start, in terms of, if you're not able, like Matt, like say, so Matt's recruited, and I know at least one of them, I meant to say this yesterday, Matt, tell John I said hello. So if you're recruiting your board for skills, which you should be doing, but if you're also having to work with existing board members that maybe came to this, as a passion or an impact, something they're interested in, but are really, really worried about the risk, the best way to give them confidence and understanding is sharing peer examples. It's allowing them to hear from other trustees who've been there, done this, got it right, got it wrong. And we actually have a dedicated resource. It's called Get Informed Social Investment for Boards. And it features around 14 different individuals who are all trustees, chairs, treasurers, who share their stories of taking on investment. We also have some really short videos around what should boards know, what's the key risk, why would you do it? And the idea is that you can show those videos to your board whenever you have a board meeting. So, and if anybody is in the situation where the board needs some help and us to broker a speaker to support the board, if you've got something you're actually looking at, then please do get in touch, and we'd be happy to do that. The next question I was going to come to, which Matt, it'd be interesting, bearing in mind we had a full Wolverhampton day yesterday, but also Sharon, who was our last speaker, was and has previously been involved in trying to build a sort of network within the Black Country and Wolverhampton around social investment. And Rich, who's with us, has posted a question: what's the biggest factor been for growing the uptake of social finance in the region, apart from Let's Talk Good Finance presentations? And is there something about peer experience and an ecosystem? So Rich, you by all means context why you've asked that question.
Yes, I'm a little bit south of you. I'm down in Gloucestershire, and I guess we're one of those regions where social finance, Mel, doesn't get particularly talked about a great deal. I mean, there's one or two people who've done things, I think, with Resonance or one or two other providers, but we're almost like trying to get the movement going, so that we haven't just got one or two individual examples of people taking up social finance, but we can grow awareness across the whole county and hopefully create that sort of positive momentum, so that if you like, we can get large numbers involved, and you really can begin to get benefits at scale from the social finance movement. So where that's working, where you have got large numbers of organisations taken up, what are the factors that's helping that to happen? What can we do down south, further south from you anyway, to make that a success? I hope that makes sense.
It does make sense. Matt, is there anything you want to say? I've certainly got some reflections on that. And
pretty sure Sharon would agree with me that Wolverhampton is not an area where there is a big uptake in use of social finance. In fact, actually, I seem to remember at one point she was organising various different forums where they were desperately trying to get people interested in the subject and fairly struggling to do so. I mean, I think...
Yes.
Sharon's putting a thumb up to that one.
Yeah, I mean, I think... I personally don't know whether it's really an important factor in terms of the regional side of things. that actually, just going out there and finding a handful of individuals that you can approach on a one-to-one basis and build some of those relations. And there are people who are less risk averse, more business minded, and have a skill set that might lend to this. And if you can get a few of those people together to start thinking about the subject and whether it might be for them, and I think that's a great starting point. I don't think you need lots of people and lots of talk about it, because otherwise you'll get bogged down, because there'll be a lot of people that will start looking at it and thinking, oh, maybe this would be for me, and maybe it really isn't. So weeding out some of them and getting down to a smaller group of people where it really could be something that is worth exploring and building relationally would be my suggestion.
Yeah, I would be with you, Matt, on that. And I know Sharon and I have spoken about this at length, and we've had other initiatives. So, just to give you some context to everybody that's on the phone, this we're going to be publishing some research with Social Enterprise UK on the 2nd of March, which basically takes the state of the sector report, which was published back in the autumn, and cuts it down by region. So just to give you, I'll give you a bit of a flavour of the West Midlands, what I know it's coming up. So in the West Midlands, social enterprises and charities are less likely to seek finance than the wider counterparts. There are some regions like Yorkshire and Humber much further ahead, and maybe I'll talk about why I think that is in the Northwest, why I think that is. Also, there's a really interesting one, and I'm definitely going to talk about this in a minute, about organisations, social enterprises and charities in the West Midlands are more likely to think that the cost of capital is too expensive, which is why I thought Matt's reflection on how much he's paying for his finance is really important. So I'm going to definitely talk about that. But Rich, I would say that, there's not a quick and easy solution. This is a really long, slow burn. All right. So I've been working at Big Society Capital for 7 years and having these conversations for 6 years. To be honest, in the beginning, I know I've got somebody from SCVO on, I think, as well. I remember doing an event from SCVO, and I'd be lucky if I had 3 people if I locked and barred the door, But people, as you can see by our audience today, more people are opening up to just having the thought. What I do think is really important. So it was heartwarming to hear Martin say that he came to this through NAFCA, and I noticed we've got several CVS organisations on, both Black Country, and we've also got somebody from Derby Dales, I think, on as well. Just have a look. I'm sorry, I can't remember. I did look before. You can always take yourself off mute if you want and tell me who you are. Can't remember. Sorry, but I know that we've got somebody on from Derby Dales CVS as well. And I think that one of the things, Martin, sorry, Martin, I saw it there before. I think one of the things that I think is really important is that this becomes just embedded in the signposting and support that a CVS would do. So in the same way that an organisation will come to you and ask about grant, it's about making sure that within each CVS and with each infrastructure or network organisation, whether that's by geography or whether that's by issue focus, so whether it's around organisations that support people who are transitioning through homelessness, we've done quite big events around that in the past, that there's somebody, doesn't have to be an expert on social finance, but just knows when somebody's talking to them, oh, hang on, they're talking about something here where I think that you could use a secured loan for that. Oh, we could send them to Good Finance, and well, they could go and talk to Charity Bank about that. And I think to do that, you need to embed it as business as usual and keep drip feeding. And then the other thing is you need to share peer examples, because when Matt tells his story, or when I go on in a minute and I'm going to tell you about a few case studies, I think it means more, because suddenly there's an organisation that looks like yours or feels like yours, or you can see some relevance in when they've borrowed money, where you think that might be relevant to you. So there's no easy route to it, but we keep going. So okay, a couple more that I am going to go to, because I want to come back to the cost of capital. Yeah, Libby said all she remembers that was that Meet the Funder event, and yeah, you're right, it's a concept that people are still scared about, and don't fully understand. So making it understandable, taking the complexity and the jargon out and making it really story related, I think is really important. We've got a question here from Dylan from Sporting Assets. So are grant funding bodies nervous of social investment as part of a mix of community projects? And if so, any advice on how to break down the barriers? Have you come across that, Matt? I've definitely got some experience of that, but have you had, have any of the social investment that you've had been part of a grant deal that wasn't where the grant came from the same place? You know, did you have match in place from anywhere else?
No.
No. Okay, so it probably wouldn't apply in this case. Dylan, I would say that my experience of this is the opposite, and that often a small amount of repairable finance can help to leverage larger amounts of grant. So why is that the case? Because actually Matt did this perfectly for me when he was explaining that level of comfort, yeah, that a social investor takes by going through that process of due diligence, which is what Matt described. That's the words that the social investors take. Often helps give a grant funder more reassurance. And there are definitely examples. I could give you some big community asset projects like Gorton Monastery, Stretford Public Hall. I'll think of some more in a minute. I think it's Ilkley Community Sports. There's a few community football clubs where I've seen it as the case. So it's the fact that the due diligence has helped the grant funder to establish that there's some level of sustainability here that makes them feel that their grant's going to go further. So that would be my experience. But Dylan, what was there a particular reason you were asking that question?
No, I think it's just I mean, social finance is relatively new, I guess, to the sporting, in the sporting context. That was why we were set up originally, and we're part of we've got Sporting Capital, so we've invested in a number of projects and used a blended approach really. So we've worked with the likes of Football Foundation and others, but I think there's still I guess it comes down to, and you said it earlier, around some of the jargon, around that. That's some of it. I mean, certainly myself, I've come from a grant funding background, and so sort of unpicking the jargon is part of it, but also just understanding about social investment and taking on debt. When as an industry or a sport industry, it's been sort of very reliant or wholly reliant on sort of grant funding to support the network. So I guess it's just sort of being able to explain and show that there are models out there, and that actually a blended approach is a really positive way. And as you say, we've been able to demonstrate through Sporting Capital and through ourselves that the benefit that can bring in terms of greater due diligence and also other skill sets and support that we can provide. But it's just continuing the sort of messages, isn't it, really?
Yeah, absolutely. And
I think our aim as an organisation would be to try and flip things on their head. So if as an organisation your grant funding is your bread and butter, and then we have events like COVID, if we got COVID-2 in 2 years' time and it all happened again, there's no guarantee we get the same levels of grant funding coming through, and it could all fall apart. Whereas if you can manage to get the social investment side of things as being your bread and butter, which is forcing you into a way of thinking that's more about sustainability in the long term, the grant funding might still be out there, but you can use that to add cream and jam to your bread and butter, and use grant funding to do the things that you've only ever really dreamt of previously, because you wouldn't have the opportunity to venture out and kind of ask for something a bit different. If you're going to a grant funder and saying, look, we've got all of our core stuff is funded through social trade, social enterprise activity and trading, but we've got this innovative idea that we'd really like to, take a punt on. Would you help us out with that? You've got a much better argument for actually them taking a chance on you, because they know that you've already got some experience in innovation and risk, and your bases are covered in terms of your core costs. And, so working towards, those kind of levels of sustainability, I think is key for the sector generally, in terms of, knowing that we can move forwards. And in some respects, I think we have to challenge some of the assumptions, because a lot of the assumptions that come from the charitable side are this is charitable work, therefore somebody should be funding it. Well, why?
And even if that answer is why, unfortunately, the cold hard facts are there isn't enough money to go around for all the needs. So
exactly.
And I love that analogy, Matt. I'm pinching that, so this is the this is the cream and jam to go with the bread and butter. I'm definitely pinching that. I really like that. And Annie has posted in as well, just to finish off on that point, and Dylan, we have a jargon buster for good finance, and a lot of this comes from my own experience. I ran a social enterprise. I came, to this sector. I spent a lot of my early days and still some of my current days where people start, I think there's something, isn't there, about the jargon that comes with something that just makes it feel slightly superior. I remember thinking, I don't know what mezzanine finance is. I worked in retail. Mezzanine used to be an extra floor. So, I just saw, and these days people talk about capital stacks. And I'm like, well, what does that really mean? Or first loss money. So we try in the jargon buster to use the right words, because social enterprise and charities told us they didn't want to dumb them down, but explain them, because there's absolutely no reason we should try and be across all of that. Now, thanks for that, Dylan. I'm quite conscious of time now, so I'm going to try and wrap us up. Thanks, Matt. That was brilliant. You covered so many things for us. Really appreciate you sparing your time, and hopefully you can hang around for the next 5 minutes as we just move to the close. Thank you. Right then, Olivia, I think we've got the final bits to share. That's great. So I thought I would just give you a few case studies then. I talked about making these relatable and trying to make sure that you understand. You can always find all of these case studies on Good Finance and More. You can search them, as I said, by geography, by the size of loan they took on, the type of product, the issue area that they work in. So you can personalize these case studies to however you want to. So I'm going to start with Grow Organic. This is an organisation I've known for a very long time, based in Chelmsley Wood, which is northeast Birmingham, a particularly disadvantaged area, sitting alongside also some very affluential wards. This came out of Sarah's passion for her own place where she lived and seeing communal areas that were run down, and she works with a team of both employed staff and volunteers, both through schools to help awareness of healthy food, but also to maintain community gardens and a lot of education-based work. This is a deal from residents. They borrowed 7% over 6 years. They turn over about £400,000 a year and borrowed 150,000. But hopefully I'm going to talk to you about a variation of deals, because it doesn't have to be a big amount of money. Yesterday I was talking through a case study of an organisation that were only turning over £25,000 when they actually borrowed money. This is Wellington Orbit, based in Telford in Shropshire. They're community art cinema. They've used, actually, Dylan, this is a really good example. They've used pretty much every type of investment and grant that's going. So they have community shares, which has attracted social investment tax relief. They've taken on, so that's equity. They've taken on debt, a loan that also has social investment tax relief from residents. They've also had considerable levels of grant, both from the local authority and also from some national grant givers as well. And they've been using this money first to create the space for the community cinema, and they're now actually into raising investment to convert the top floors and also to buy the building. This is Edgar Academy in central Birmingham. This is an issue from Big Issue Invest, and this is the one I was talking to you about. They were turning over £25,000. They borrowed 50, which is that average first-time need. There are organisations that borrow less, but this is sort of the average. Miriam, who runs this organisation, again, I think started this as sort of passion, volunteering in place, straight from alongside studying for a degree, and now she's an entrepreneur running this organisation and this business, creating sort of wraparound care, community integration, lots of educational support. And there's a fantastic video that goes with this. If you want to know more about this, you can find it on our website. I don't know, some of you might know Martin, runs Citizen Coaching. He's out of Birmingham. Again, I've known Martin a very long time. This is his second go at social investment. The first time he borrowed from Key Fund. Something very important he said, I know I'm going to come to this in my next slide. So something that Martin said was he had to kiss an awful lot of social investment frogs before he found his social investment prince, which I think what he means is finding the right investor for you. Because when you borrow money for a social investor, you know, this is going to be a long-term relationship. So, you know, as Matt said, over 6 years, he's borrowed money. You know, you're going to have to continue to talk to the organisation. So finding somebody that shares your values and understands your business model is really important. Citizen coaching, counselling, run anger management, online coaching, and also have coaching and counselling rooms, a fleet of rooms that can be hired. So I'm going to finish with our 7 lessons learned. These are things that have come from all the different Hear from a Peers that we've heard from around the country. They're not my lessons, they're not my learning. They are peers like you that have been through this journey and the things that they tell us. Some of them we've covered already, but I always think it helps to just round up with these. So social investment is not benevolent money. It's money you need to pay back with interest. Therefore, you need to think enterprisingly. You need to have a trading income. I think Matt did that perfectly for us and explained the many ways you might do that. Impact matters. What makes a social investor social? They want to know what difference their money is going to make. But it's not down for them to tell you what the outcome should be. It's not like a grant funder relationship. It's down for you to say what difference the money will make. So measure what you value and they will too. Don't feel like you've got to go into a whole rapture of measuring things for the sake of measuring them. It's about more than the money. That goes to Martin's point about finding the right investor. I've known many investors to go well above and beyond just the investment. So going into contract negotiations with local authorities, helping to find board members, being flexible, extending the terms of the loan, changing the loan, because things don't always go the way that you planned them. So that comes to number 4. Honesty is always the best policy. What happens if it doesn't go well or right or the way you planned it? It won't. It never does. Don't stick your head in the sand and think it'll be okay. Don't just don't make your payment this month, and your social investor will expect to hear from you. They will want to help you. They can't help you if they don't know. So please, if you do take on investment, talk to your investor if things get tough. Why isn't it cheaper if it's social? I thought I'd come to this one very quickly because I said to you that people in the West Midlands feel that social investment is too expensive. It's about being able to compare apples with apples. So we often think that too expensive is different to, the base rate or mortgage. Well, when you're borrowing unsecured, that means you don't have a building or anything that an investor could use should that debt not be repaid. This is very high risk money. If it doesn't get repaid, then the investor's going to lose their money. So somewhere between 6 and 8.5%, 9% is quite average for this type of investment. And honestly, if you were borrowing in an SME market, so not social enterprises and charities, you could probably expect to pay a lot more than that for this type of finance. So I always say to you, it's about trying to work out what does too expensive mean? Because actually the difference, say, in 2% or 1% over a 6-year term on a monthly basis might actually be very little. And that's where our cost of capital calculator, we have another little animation like the one you watched earlier that explains how the cost of capital is arrived at, and also a cost of capital calculator that I'm sure Annie's already beat me to it and post it in there, which is great. Due diligence isn't fun, but it does make your business better. Don't need to cover that one. Matt did it perfectly. So even if you don't get investment, we often have people saying that it makes their business better because it makes them think about things. And as I said, social investor will not lend you money if they think that that's going to be bad for your business and tip your business over the edge. Don't forget, they want you to make a difference. And it always takes longer than you think. Don't leave it till the last minute. I often say to people, social investment is not best used if your back is against the wall. Sometimes investors can turn stuff around in 6 weeks, but often the conversation, like Matt said, can take up to 12 months as you work through what's the right type of money. So leave plenty of time for those discussions. And if you do get into conversation with the social investor, always ask them what their average investment time making decisions are. So I think we're going to come back to one more poll, I think. Olivia, is that right? And I think we're going to, have I got that right, Olivia? We're going to go back to that original poll and ask the same question? Yeah, absolutely. So I want you to think back to what you said at the beginning, where we had most of us grouped under 5, and just say, on the basis of today, I'm not expecting anyone to suddenly become 10, But if you had to rate on a scale of 1 to 10, how would you rate your knowledge of social investment now? Hopefully you've learned some stuff in this session. And we're 15 out of 21, so 70. Oh, we're nearly back up. Yeah, we're back up at those sorts of numbers that we had before. Right, so we've got nobody in the 1, 2, or 3 anymore, which is great. So it just, I mean, I think that the lesson that I would take away from this is you can't learn it. You can't be an expert. I don't consider myself to be an expert after 7 years. I just know a lot of stuff that people have told me. But the most important thing is to keep in touch, because things change all of the time. You can do that by subscribing to the Good Finance newsletter. You can do that by taking more part in more Good Finance events. You can do that by looking at case studies. And actually, if you want to hear more inspirational speakers like Matt's, so from more peers, we often podcast these sessions. So we have a podcast channel that's devoted to our Hear from a Peer speakers telling their journey. So whether you are Lizzie from Think to Speak in Yorkshire and Humber, to whether you are Martin from Citizen Coaching, to whether you are, I'm trying to think of a southwest one, SoFab Sports in Cheltenham, or I can probably go a bit further down to one of the Bristol ones, you can hear about stories. Thanks very much to everybody for your participation. We have a little survey. We're really grateful for your feedback at the end. And again, thanks, Matt, for joining us. Thanks to everybody for your questions. And we hope to see you again at another Let's Talk Good Finance soon.